You know what's crazy? Last month I checked my investment portfolio and realized I was tracking 47 different stocks across 12 platforms. 47? I felt like a frantic day trader, constantly refreshing apps, checking news alerts, and losing sleep over every market fluctuation. Sound familiar? Well, today I'm going to show you why less truly is more when it comes to building wealth, and how embracing minimalist investing might be the secret sauce you've been searching for. What if I told you that some of the wealthiest investors in the world follow incredibly simple strategies? Warren Buffett famously said that diversification is protection against ignorance, suggesting that if you know what you're doing, you don't need hundreds of investments. This isn't about being lazy with your money, it's about being intentionally strategic. Welcome to what I call the Financial Zen Zone, where minimalist principles meet smart investing. I'm talking about stripping away the noise, the complexity, and yes, even some of those apps that are constantly pinging you with market updates. Because here's the thing, true wealth isn't built through frantic activity, it's built through patient, deliberate action. Let me paint you a picture of what most people's investment journey looks like. They start with good intentions, maybe buying a few index funds. Then they read an article about growth stocks and add some tech companies. Someone mentions dividends, so they grab some utility stocks. A friend recommends crypto. International funds get thrown into the mix, and before you know it, they're managing a financial zoo that would make a circus performer dizzy. The psychological toll of this approach is real. You're constantly second-guessing decisions, comparing your portfolio to others, and feeling overwhelmed by the sheer volume of choices. It's like trying to meditate in Times Square. Technically possible, but definitely not optimal. So what exactly is minimalist investing? Think of it as Marie Kondo for your portfolio. It's about keeping only what serves your long-term wealth-building goals and brings you financial joy. Every investment should have a clear purpose and fit into your overall strategy. If it doesn't, it's just clutter. The core principles are beautifully simple. First, focus on broad market exposure rather than picking individual winners. Second, prioritize low costs because fees are wealth killers. Third, automate everything you can to remove emotional decision-making. And fourth, think in decades, not quarters. Let's talk about the three-fund portfolio, which is minimalism at its finest. You've got a total stock market index fund for domestic growth, an international stock index for global diversification, and a bond index for stability. That's it. 3 funds that can capture virtually the entire investment universe. It's like having a Swiss Army knife instead of carrying around an entire toolbox. The beauty of this approach becomes clear when you consider the numbers. Studies show that the vast majority of professional money managers can't consistently beat a simple index fund over long periods. Yet we convince ourselves that we can outsmart the market by constantly buying and selling. It's like believing we can beat Google at organizing information. Theoretically possible, but probably not the best use of our time. But minimalist investing goes beyond just having fewer holdings. It's about creating systems that work for you instead of against you. Automated investing is your best friend here. Set up automatic transfers to your investment accounts, automatic purchases of your chosen funds, and automatic rebalancing. Your future wealthy self will thank you for removing your present self from the equation. Here's where it gets interesting psychologically. When you have a complex portfolio, you're constantly making micro-decisions. Should I sell this stock that's down 10%? Should I buy more of that fund that's performing well? Each decision creates what psychologists call decision fatigue, and it's exhausting. Minimalist investing eliminates most of these decisions up front. The tax benefits are another hidden gem. With fewer transactions, you're likely to have fewer taxable events. Long-term holding strategies naturally lead to more favorable tax treatment. Plus, index funds are inherently tax efficient because they don't constantly buy and sell underlying stocks like actively managed funds do. Now, I know what some of you are thinking. Doesn't this approach miss out on big opportunities? What about that hot stock that doubled last year? Here's the reality check. For every story about someone hitting it big on an individual stock, there are countless stories of people who lost significant money trying to time the market or pick winners. The minimalist approach actually captures all those big winners automatically. When Apple became the world's most valuable company, it grew within your total market index fund. When Amazon revolutionized retail, your broad market exposure captured that growth. You don't miss out on winners. You just capture them as part of the whole market's success. Let's address the elephant in the room. Boredom. Minimalist investing can feel boring, and that's actually a feature, not a bug. Exciting investing is usually expensive investing. When your portfolio is boring, you're not constantly checking it, not making emotional decisions, and not paying excessive fees. Boring is profitable. The mental clarity that comes with simplifying your investments is profound. Instead of spending hours researching individual stocks or trying to time the market, you can focus that energy on increasing your income, reducing expenses, or simply enjoying life. That's the real wealth. Having time and mental space for what actually matters. For those ready to embrace this approach, start by auditing your current investments. List everything you own and ask yourself why you own it. If you can't articulate a clear reason that fits your long-term goals, consider whether it belongs in your portfolio. This isn't about making drastic changes overnight, it's about gradually moving towards simplicity. The rebalancing process becomes almost meditative in its simplicity. Once or twice a year, you check if your allocation has drifted from your target. If your stock funds have grown too much, relative to bonds, you sell some stocks and buy bonds. If stocks have declined, you do the opposite. No complex analysis needed, just mechanical rebalancing back to your target allocation. One of my favorite aspects of minimalist investing is how it scales with your wealth. Whether you have $10,000 or $10 million, the same basic principles apply. The complexity doesn't need to increase just because your account balance does. In fact, many ultra-wealthy families use surprisingly simple investment strategies once they understand the power of broad diversification and low costs. The compound interest magic happens quietly in the background while you live your life. You're not constantly monitoring, adjusting, or second-guessing. Your investments are working as hard as they can, while requiring minimal effort from you. It's like having a garden that waters itself. You planted good seeds, created the right conditions, and now time does the heavy lifting. As we wrap up today's journey into the Financial Zen Zone, remember that minimalist investing isn't about being lazy or uninformed. It's about being strategically simple. It's recognizing that complexity often masquerades as sophistication when simplicity is actually the more advanced approach. Your future wealthy self is waiting for you to embrace this mindset. Stop managing your money like a frantic day trader and start investing like the calm, confident wealth builder you're meant to be. The Zen Zone is calling. Are you ready to answer? Thanks for watching, and I'll see you in the next one.